Bitcoin to 10 million US dollars. This is not a joke. This is a serious prediction by a pretty smart person. A smart person that makes charts like this. Now, what is this chart? This is an explanation of the cross-asset stock-to-flow model for Bitcoin. Now, what's that? It looks at what should a market cap of an asset be given its annual inflation. In other words, when the inflation of an asset goes down, it becomes more rare. When something is more rare, it should be more expensive. And so the lower the annual inflation of something is, the less new supply hits the market every year, the more expensive this asset should be. And so you can make that analysis, and you can make this across assets. So across asset analysis. You can look at gold, you can look at silver, you can look at Bitcoin historically. And you can plot those dots in terms of annual inflation versus its market cap. And you can try to find out this relationship, and this is what this chart here is showing. So on the y-axis, we've got a logarithmic scale. So each horizontal line here is a 10x from one another. And then on the x-axis, we've got the flow value, which also is logarithmic, going from 1 to 10 to 100. Now, what does flow here mean? We are basically looking at the inverse of the annual inflation. So say you've got 2% of new supply hitting the market every year, then the flow would be 1 divided by 0.02, and that's 50. Now, if you've only got 1% of annual inflation, you divide again 1 by 0.01, so that's 100. The less annual inflation there is, the higher the stock to flow. And so the idea is, since there is, for example, less gold mining happening every year, the gold supply isn't growing as quickly as, for example, silver supply, that's apparently the explanation why gold's market cap is higher than silver's market cap. The silver supply is expanding much quicker than the gold supply. And so what do we see over here? We see different data points. For example, this here, this is silver. This here, this is gold. And then we've also got different Bitcoin related dots. And these are based on the cycle, right? How much inflation was there in Bitcoin? How much new printing has happened? And since Bitcoin's inflation halves every 4 years, its stock to flow is doubling every 4 years. And thus its market cap should be rising. How much it should rise is derived from this regression line. So this was when Bitcoin was very young, then 4 years afterwards, then 4 years afterwards again. And then the current prices. And this would in turn imply that with the next halving, we go over here, and then another halving, we go over here. 10 million per Bitcoin in just the next 8 years. Does this make sense? How well did this work in the past, this model? Let's have a look at Bitcoin's price together with the model price. Okay, so this rainbow colored price here, this is the Bitcoin price, right? So this turns blue whenever there's a halving and red when the halving has just been done. And we can see, right, again here a logarithmic scale, that there is some kind of an approximation to the line. We can also see with each of those halvings, the price roughly 10x's. Now this model was especially popular around 2020, 2021. It is losing some steam though, and I think it is justified. Based on this model, the price of Ethereum, for example, would be infinite now, because now there is negative inflation happening, right? Ethereum is ultrasound, it burns tokens. It's not just the additional supply that gets lowered, it's actually the supply stock itself that's shrinking. So a model already doesn't really work for Ethereum, but the model has another fundamental flaw, right? At 10x every 4 years. How is this possible once we extrapolate this, say, just for the next 20 years? Bitcoin would be worth more than stocks, more than bonds, more than all of the money in the whole world. The model has to break at some point. And to a certain degree, it already has, right? It doesn't work across different cryptos. And even if we look very closely to this chart, it also tends to be breaking even over time for Bitcoin, because we saw this massive overshoot by roughly 10x in 2013. But look how the price tended to be above the model price up until 2018. But then now, since then, it tends to be rather below. Bitcoin doesn't have to 10x every 4 years in order to be a worthwhile investment. 10xing every 4 years means 80% per annum in growth. Bitcoin does have to grow though, because the new supply gets cut in half every 4 years. That does mean that the miners, they still have to cover the electricity costs, and they get less and less Bitcoin all the time. So in order to at least cover the electricity costs and to keep the network somewhat stable, Bitcoin's price needs to double every 4 years. Now that's a growth rate of roughly 18% per annum. 18 to 19. That's way more doable, right? The stock market has done 7%, but Bitcoin's long-term holders, they really just keep onto their Bitcoin. Bitcoin becomes rarer and rarer with time. Fiat tends to inflate faster and faster. And Bitcoin is a true alternative if you do face government overreach. If you do face unfair taxation of other asset classes, if you do face very high inflation that can't be kept up with property or traditional stocks because the individual's income isn't growing as quickly, Bitcoin is a great asset to protect against these things. And we do see that over time, the number of holders for Bitcoin very steadily increases. So this is long-term very bullish, but I'd argue it's almost harmful to talk about these 10x's every 4 years to promote models like this, because then people will get disappointed. If you really expect $500,000 per coin in just a few years, or even 10 million in less than 10 years, then expectations aren't really aligned. A better way to measure Bitcoin is to simply just look at Sharpe ratio, right? Look at how much is it performing relative to its daily volatility. And on that measure, so in terms of risk-adjusted returns, Bitcoin is still very, very profitable. So stay realistic, spread your capital across different asset classes. Don't go all in on Bitcoin, also have property, also have precious metals, maybe some stocks as well. Don't go too heavy on altcoins, especially. They tend to underperform Bitcoin. Have a reasonable allocation to different areas and you should be doing fine. Bitcoin still gets adoption. Bitcoin still is in growth mode. It's not at these hyper levels of 80% per annum anymore, but that's totally fine. It's way less risky nowadays than it was 4 years ago. It's now way more reasonable to allocate larger amounts of capital to Bitcoin than it was when Bitcoin was just at, say, $100. So be smart about it. Don't build castles in the sky that then come crashing down. Let's all stay rational and simply just weigh risk versus return.